Today, I'm going to show you exactly what closing costs are, why are they so expensive, and what are they comprised of. Tell your friends, tell your family you got yourself an accepted offer. But oh snap, you looked at the mortgage paperwork and now you get whacked with a $30,000 charge for a closing cost. What are closing costs and why do you have to pay them? But before we get into it, I'm Andrew Russell, owner and founder of RCG Mortgage, two-time winner of NABI Mortgage Broker of the Year, number 10 across the country via Scotsman Guide. Make sure you like, follow, and subscribe to our channel. The more followers, the more lit content we put out for you. So, closing costs. Why do you have to pay them? What are they? We're going to break it down into three easy sections: the bank fees, the title fees, and the escrows and prepaids, right? The three sections. We're going to break it down and go over what each one is and why you have to pay it. So the bank fee section. Now, this could be comprised of all sorts of goodies where people are making money. There's origination fees. There's points, discount points. Are you paying extra to buy down the interest rate? Administration fees, commitment fees, application processing, underwriting. All fees that, depending who you're working with, lender to lender, broker to broker, there are certain fees that you have to pay. It's negotiable, but a lot of your closing costs could be in the origination fee section. That's typically in box A on the loan estimate. Now, when you talk about title fees, we're going to give an example of buying a single family home. There might be a settlement fee or a bank attorney fee, having someone close the loan on behalf of the lender. There's going to be title fees. Now, what's title insurance? Why do you have to get it? Why do you have to pay for it? It actually says you don't have to get it right on the loan estimate. Now, imagine you bought yourself a Lambo. Would you ever drive in pothole-infested New York and not have car insurance? No way. You're crazy, right? Same thing. When you're buying a house paying several $100,000, why would you ever buy a property and not have insurance? God forbid the chain of title as you bought it wasn't good, you're going to get insurance, but it could be several $1,000s. Now, also, there's recording fees. There's a mortgage, there's a note, there's all these crazy things, but there's fees to record you owning the property, having a lien against that property with the specific county. There's a cost for that as well. And of course, tax. There could be mortgage tax, transfer tax, all state specific, but the title fee section, it could add up, could be tens. That's right, tens of thousands of dollars. It's a very expensive section via closing costs. Now, the last is your escrow section, your prepaids. When you close, the house has to be insured for a full year. So depending on what your insurance is, you might have flood insurance, could be thousands with an S, thousands of dollars right there. Then with property taxes, typically, there's gonna be up to 6-ish, 8-ish, 4-ish months. We estimate always 6 months of property taxes. So when you close, the lender is going to hold about 6 months of taxes. So when the bill comes due in the future, between that amount they're holding at closing and the monies within your mortgage payment in the future, if you're escrowing your mortgage or including taxes and insurance in your mortgage payment, there'll be enough to pay it off. And again, that could be expensive. Maybe you got yourself a nice palace with $40,000 in property taxes. Half of the year is what? $20,000. It could be 20 grand right there. Then, of course, depending on how many days are left in the month, there's interim interest. There's a per diem amount you pay in a mortgage, and then that amount depends on how many days it's prorated left in the month. You have to pay that at closing. And remember, when you buy a house, it's not like when you rent an apartment. If you close in the month of January, your first payment's in March, which is paying February's interest. But typically when you rent an apartment, if you rented in January, your rent is due on the first of the month or the preceding month. So always remember, when you buy a house, people say you get a free month. You really don't. It's just your first payment, which is 2 calendar months after you close. You're paying the preceding month's interest. Make sure, YouTubers, you make note when you shop around. What are you comparing? The rate and the origination fees, right? The bank fees, the first section. The rate and the bank fees, not the title fees, not the prepaids, escrows. No matter who you work with, it's always the same. So if you have a certain interest rate quote and there's certain fees, whether there's points or underwriting fees, and you want to shop around, make sure you get the best deal. That's what you take and shop around. Do not compare from lender to lender the title fees, the escrows, because there are some funky ways that some places make it look a little bit more attractive. But nonetheless, the actual apples-to-apples comparison when you're shopping around to get the best deal is, in fact, the interest rate and the bank fees. So to recap, closing costs on a single-family home, as an example, it's a rite of passage, but you have to pay it. Again, there are the bank fees, the title fees, and the prepaids, the escrows, that third section. Great news! When you close, that's the only time you have to pay. But nonetheless, you do have to pay it. It's a rite of passage. Thank you so much for tuning in, guys, and make sure you subscribe to my channel and slap that bell to make sure you get alerted for every time our lit content drops. But until next time, make sure you mortgage responsibly.